Hey everybody, and welcome to the PlantStock channel. You are here with Mayur and me. Today we thought we would talk about Tesla stock, considering that both of us are quite heavily invested in the stock. I think I'm around 75% in my portfolio. What about you, Mayur?
Yeah, same exact thing. 70% of
Yeah,
my personal holdings.
exactly. And you've been invested in Tesla for how long?
I bought my first stack in 2013, and
Wow.
I've been at it since then.
So
So yeah,
almost 10 years.
yeah, almost 10 years. It's crazy.
Wow. So, yeah, I'm quite new compared to you. I started investing in Jan. Oh, actually, 2019 on the 31st of December, I think it was. On
Oh, that's the perfect
base.
timing. That was
Yeah,
the perfect timing.
exactly. So I went in there and started investing in them, and then about 7 8 months after, I went in quite heavy.
Hmm.
And that has served me quite well. And obviously, if you've been investing since 2013, it's probably served you quite well as well, right?
Yeah.
So today we thought it would be interesting then to talk about a potential stock price for the end of the year, because obviously there's a lot of speculation, and obviously this is also speculation. Remember, whatever we're talking about here, this is not financial advice, just two friends who are interested in Tesla stock, right? So keep that in mind, do your own due diligence. But you had an interesting discussion regarding that on your Twitter account.
Yeah, so I put out a tweet saying that, I think for a company that's growing at more than 50% on the top line, and a company that like Tesla, like when you grow at, say, for every 1% of revenue growth, you actually end up getting more earnings per share growth. And that's this phenomenon in finance that we call operating leverage, right? Operating leverage basically means that every additional unit that you sell beyond your break-even point is pure profit at that point, because your fixed costs don't go up with each additional sale. So there's a minimum amount that you need to be selling that offsets all of your fixed costs. And then each additional unit that you sell, the gross profit of which goes straight to the bottom line as profitability. So for a company that's growing the top line at 50%, I think, earnings are going to continue to grow at 75% on average, I believe, on a CAGR basis over the next 5 years. So, a company that's growing at 75%, earnings for the foreseeable future. This is with, before Cybertruck has even started shipping out yet, before Austin and Berlin are even up and running yet. So, if you assign just a basic PEG ratio of, say 1.5 to 1.7, that's very reasonable, for most companies. It's not hard to justify, a PE multiple of somewhere between 100 to 120 even. Now that can change, if interest rates rise dramatically, but if you see a company that, has that, characteristic, it's really not outside of the ordinary to see multiples like that. We saw that with Amazon for many years.
Yeah.
And I think that's going to happen with Tesla. So, 120 times if we were to do that, and if you assume an 8% cost of capital, then, and if you think that they can do earnings per share of $14 this year, which I think is going to happen now. They just came out and destroyed expectations in Q1. People are continuously underestimating how profitable Tesla's core business is and how efficient their factories are. It's an iterative process. Every factory is getting more and more optimized for efficiency. So, they pour in $1 billion in a factory, maybe 2.5 total. If you count all of the additions and the expansions that they do to each factory over the years, they're spitting out $14 billion in operating cash flow total for factories that were, basically, invested for 1 to 2.5 billion total.
Yeah.
So the return on investment is insane for these factories, right? So I think a PE multiple of 100 to 120 times is not outside of the realm of possibilities. So if we do the math with that, there could be a scenario where we're at 1,600 per share by the end of the year, by the
Yeah.
end of this year.
Yeah. You had specifically 1680, right?
1680, yeah.
Yeah. So
We assume 120 multiple and $14 a share for 2022.
yeah. Well, you're not the only one who's bullish, obviously. Even if we are taking, I'm going to show you guys Seeking Alpha here, looking at Tesla, right? And if you look at what the analysts say here, it is that it's a buy. And out of the 37 analysts that's been looking into this company the last 90 days, it's a strong buy by 11 of these analysts, right? And the average price is almost $1,000, 996. And some of them who are really also bullish, like me and Mayur here, they are expecting around $1,600 too. So, and I would imagine that is by the end of the year.
Mm-hmm. Yeah, exactly. And like longer term, I'm actually a little bit, more sort of, not as bullish as other people are. But like, for example, I just, wanted to share this screen right here. This is my sort of dashboard that I made where I do all of my ROIC calculations. And you can see the rate of change has been spectacular for Tesla. It's now at 32.2% on cash ROIC, which basically puts it in the league of big tech at this point. They've actually exceeded NVIDIA now on a cash flow return on capital basis. So remember, why is this important? This measures efficiency, and research studies have shown that companies that do high ROIC and a high rate of change in ROIC tend to trade at a premium multiple, right? So that's why we want to know, what multiple is justifiable for Tesla, and I think that's why they can justify a higher PEG multiple than other companies that have lower efficiency. So, what's my 5-year target? Again, if you were to assume that they continue to deploy capital at a rate of 15% per year, again, that's actually a slowdown from what they have been doing in the past. They have been investing at a rate of almost 23%, but I think that that's going to slow as we go because now that we have one major factory on every continent, every major continent in the world, I think their rate of investment will actually slow down. That's my assumption. We'll see if that's true or not. So I'm assuming a 15% rate of investment going forward for the next 5 years. And I believe that they're going to reach a cash ROIC of 50%.
Well,
So Apple is actually at 44%. They're like, the highest in terms of ROIC among big cap technology stocks. So I think they're actually going to take out Apple and become, the most capital efficient business out of big tech
well,
at 50% ROIC. And this is happening because of how efficient these factories are. Every factory is getting better in terms of its layout, and the vehicles themselves are getting simpler to build, right? We know that, the Model Y now is built using a single die cast. So the entire body is one piece of metal that's basically punched from a gigantic die cast machine. They're just absolutely this is a revolution in vehicle manufacturing. So all of these things added up. Plus, if we seem to be on board with the idea that FSD is getting better, there could be a slight uptick in the take rate for FSD, which is their software package. That's basically pure margin. So I think it's very, very reasonable that this rate of change is going to continue until it gets to about 50%. So 50% cash ROIC, 15% CAGR on their rate of investment, right? That tells me that in 5 years' time, they could be easily doing operating cash flow of somewhere in this vicinity of 45 to 50 billion in operating cash flow.
wow.
And if we assign a 60 multiple to that, which I think is where they're going to end up getting to eventually, it won't always stay at this 100 range, right? Then you can see that the internal rate of return, the IRR, meaning the return on your investment from today going forward, will be about 25% per year. So that's a price target of roughly $2,400. So that's my expectation over the next 5 years. Now, what does this assume? It assumes basically only today's car business extrapolated going forward, given the opportunities that we see with Cybertruck and the semi-truck, as well as, expanding, Model 3 and Model Y sales. as we gain more and more market share. So this is not assuming that they solve robo-taxis. This is not assuming that they solve AI robots. It's purely the auto and energy businesses that are going forward with it, with an expectation of increasing efficiency because of what we know to be true with regards to their factories and their iterative process.
All right.
So that's my longer term target is 2400 without robo taxis involved. So I think robo taxis are basically a free call option. You know, if you buy Tesla stock today, I don't think you're really paying for you're not paying for robo taxis or any crazy innovations that Elon Musk has been talking about. You're just buying today's business, which even that is undervalued in my view.
All right, guys. So that was it. We just wanted to give you a shorter video here regarding a potential price target for this year and what we could actually look forward to in the coming years. And since, again, Mayur, you work as an analyst, right, at Sachs?
Yep.
Yeah, and you've been doing this for 15 years, so you should probably have some experience in what you're talking about when it comes to these kind of things.
I would love to say that, but look, no one knows anything about the future. So no matter how smart all of this looks,
No.
ultimately no one has any idea what they're talking about, including me. So.
But again, obviously this is speculation for pure fun, and especially if you're interested in Tesla, guys, let us know down in the comments if you're interested in hearing us talking more about Tesla on the channel also, because they go in line with the kind of values and philosophy we have of investing in companies that could do good for the planet and do good for people. So, all right, guys, if you want to join our free Discord channel where we talk about different stocks, including Tesla, take a look down in the description. Again, it's free, where you'll meet Mayur and me on a daily basis. And feel free to subscribe to the channel, and please like the video so we can get it out to more people out there. All right, guys, thank you for today. Hope you have a great weekend. Thank you, Mayur. See you soon.
See ya.